Hello and good morning. This is Ahura with another daily outlook video. As you know, in this series of videos, we are generally looking at the market, what happened, what is going on in the market, and what we have to expect from today's financial market. As Let's review the yesterday what happened in the market first about the economic data, and then we will go to the main topic, which is Omicron virus, the variant of the coronavirus actually. On the economic front, yesterday was not such a huge or busy day. However, we had German factory orders missed expectations, falling by almost 7%, 6.9%. It's not a good sign for Eurozone and for Germany as well. Factory orders means that in next months we will have less production, and less production means less retail sales, less GDP. So factory orders is very, very, very important, and we have to watch the factory orders much earlier than as a earlier signals we have when we see the factory orders is falling. It's kind of the signal for next month that we have to see the employment level, we have to see the production level and retail sales. This is very, very, very important, and we have to take care of that series. On the other hand, construction manufacturing PMI construction manufacturing PMI in Britain, United Kingdom is increased, which is a positive sign for GBP and generally for United Kingdom. Today so far we had export data from China, which was very kind of uh, following very carefully with from the market participant side for the quarter three and sorry, for November. Yeah, for November we had it. The house price for the quarter from it was from Australia. Anyway, let's go there. In We had Chinese export and import data, both of them increased, both imports and export increased. However, import increased much faster than the export, almost twice more than, not twice, like 80% more than expectations, which is a good signal for the stock, for generally for financial market, which means that the Chinese don't, it has two signs. First, the Chinese domestic market has increased, the demand in the domestic market has increased. The second means that they increase the raw material to production for production, which it means that international demand also increasing because most of the Chinese import is the raw material. So therefore, but it can be a positive and a good signal for generally for the market, for financial market. Finally, just a few hours ago, just like 30 minutes ago, RBA, not even the 30 minutes ago, less than 30 minutes ago, Reserve Bank of Australia published its statement. Yesterday, I talked on the weekly outlook, I talked about the statement from RBA interest rate decision and its statement. As yesterday I mentioned, we were not waiting for any changes, and this is what happened. RBA, Mr. Lula, RBA governor, mentioned, emphasized that as long as the interest rate is not, as long as inflation is not on the Reserve Bank of Australia's target, which is between 2 and 3%, they are not going to change anything on the interest rate. So the interest rate will be there as long as the central bank cannot reach the inflation target. On the other hand, he mentioned that the Omicron variant didn't change anything. Let's go to see the at the same time see the Australian AUD chart. This is what happened, which was expected. He mentioned that Omicron variant of coronavirus didn't change anything on the on economic outlook. Yeah, it's slowed a bit, but in general outlook didn't change anything as it's not as much dangerous that it was expected before. And he mentioned also that the labor market is very strong and the labor market is going well and the economy is totally in will be in its will on second half of 2022. This is so far what happened. But let's go to the stock market in the US stock market. So that's what happened. That as you see that the reason that Australian where is that? Oops, sorry. Where's my chart? The reason that Australian Aussie is Australian dollar increased. It was against US dollar and against its other crosses was because of kind of it was because of this kind of policies that we were waiting from to see from Australian central bank. However, it's just a short term. Why? Because this upside expectations is kind of is kind of related with the downside or side movement of US dollar as well. Since this policy from Australian central bank means dovish policy, it's so hard to believe that we can breach above 0.70. Actually, let's say 0.71. Just like in it, go to the model. It's hard to believe that the Australian dollar can breach the 0.70 against US dollar. So this is very important. Let's go here. This is very important resistant at the moment. And with this how the dovish policies, most probably we will see the Australian dollar still in a general downtrend against dollar. This is what happened yesterday and right now actually this is what is happening actually in the market, in Asian market. Asian market recovered on the other hand. I don't know why don't have the Nikkei here. Let's bring the Nikkei here, or I did it. Just let's to find the Nikkei here. Let me say that Australian market generally uh, in general, we can see that the stock markets generally in Asia is increasing, mostly because of the Chinese new law. Actually, there is a two reasons. First of all, like we can see that we have the news about the Omicron variant of the coronavirus that it is not as dangerous as it was expected before. Therefore, the market risk decreased. Let me find the till I find the market risk decreases. Oh, Nikkei. Where the hell is my Nikkei? Anyway, the Nikkei is increasing. I can't find it here right now. It's too much data here. Okay, generally, Chinese, Asian stock market's increasing. There is two reasons for increasing the Chinese stock market, Asian stock market in general. Firstly, because of the Omicron variant of coronavirus. This is the first reason, as it was the reason that yesterday we saw. Oops, here's the US dollar index, and here's the VIX. Yesterday we saw that the VIX fell because of news from Omicron that it's not as dangerous as it is, as I mentioned. And on the other hand, in Asia, we had the news from Chinese central bank that they again lowered the reserve ratio. You know, the reserve ratio, it means that if the banks wants you give if the banks they wants to issue the new loans, they have to have some reserve in the central bank. So they decrease this ratio, so it means that the banks they can give more money out, they can kind of give more loans to their clients, to their customers, which it means that we will have more money supply in the market, more money in the market. So it is kind of the dovish policy from the Chinese central bank, People Bank of China, to help the market. So therefore, it was helping Chinese stock market, especially Asian markets, that it hit it 1 year low a few days ago after this coronavirus concerns, and at the same time we had the Evergrande again, as you know, yesterday 15%, almost more than 14% loss at the end of the market because of the alarm that they gave that they probably cannot pay all their debts. So by this news, most probably they can pay back their debts as well. So the market is increased at the moment. In United States and Wall Street also, you can see the market increase again as the coronavirus concerns decreased, and we can see the SP 500 increasing, Nasdaq also. Let's go here. Nasdaq also increasing, and Dow Jones as well. But the question: can they continue? At the moment, as long as let's go to let's see the US dollar chart. US dollar chart is still in uptrend. Yesterday also it was growing again to 96.14. Why? Decreasing the scare, the fears from the Omicron variant of the coronavirus means that the central bank, with the very good employment and any on other economic data, it means the central bank with good economic data and increasing inflation, which will be updated at the end of the week, one will go faster to the hawkish policies in the United States. which it means that US dollar will have more demand and stock market should be under pressure for the short term, not the long term, for the short term. So therefore, overall downtrend still didn't change. Still, we are waiting to see downtrend from here. So SP 500 can decrease from any number around 4,630, 600, 500, 4,000 oh, sorry, 4,630, 6,650. Around these numbers, it is a place where the SP 500 can decrease because of the overall the market condition and this Polish policies, the monetary policies that we were talking about. So this is the market condition and overall, and the speed increasing in the first few hours, it doesn't mean that it actually it's just futures market increasing in the last hours of last night in Wall Street and the futures markets that are also still increasing today. It doesn't mean that it can continue. That's should not be forgotten. On the energy market, yes, oil was hit by coronavirus and again was increased more than 5% from yesterday's low because of lower scare. So this means it means that above $70 if the oil US oil can pass above the $70, which is very expected in a few hours, we can see much higher levels or more especially because of New Year holiday and more demand for travels and for jets fuels. Though therefore uh, increasing in the oil market is very expected. About the stock market, I talk about the gold. Let's see the gold market. The gold is, has a less demand. On the other hand, we have a problem in inflation. Sorry, on the other hand, we have a problem. That is inflation, and with this current inflation, uh, seeing with this current inflation and how expected policies, much lower levels for the gold is out of expectations. Therefore, gold still we have this side movement with nowhere to go around 1,800, a little bit up, a little bit like $20 up or $20 down there. So we do not have positive expectations for the gold market, neither the negative expectations, as the ops both kind of factors against each other. They are moving the market. So therefore, the gold market, the gold expectations, very mixed expectation at the moment. This is about that, and on the economic calendar, we will have the German industrial production data today, which should be closely watched after, especially after yesterday's data from after factory orders, manufacturing, industrial production, and manufacturing production in the next days will be very important. We will have the same the French export data, same, actually trade data, same as we had for the Chinese, which should be in, should be watched closely. And then German ZEW economic sentiment, which is very important for Eurozone. Economic sentiment in Germany will tell us that what is totally the economic sentiment in the Eurozone, as it is the biggest factor and biggest economy on Eurozone. And there later we shouldn't forget and we should follow the GDP from Eurozone. The Eurozone GDP for this third quarter, the first expectations, and in the US season we will have US trade balance and US trade data, same as we had what we had for the Chinese, which is very important to watch. And but in and also EIA short term. Yeah, today it is very important. EIA short term energy outlook. This is very important to be watched. EIA short term energy outlook. We have to follow this energy outlook. This is very important to watch this and follow. You should try to read it. Try to read it and the expectations and the report which will come after that. But it will be afternoon, just right after US market opens, or like few hours after US market opens. Yeah, and in Canada, every PMI data should be watched also closely. This is generally what is expectations for today market. So the general about the different markets, I explained my idea. I told what's going on and what's are our expectations from the market. Hope it was useful for you guys. Do not forget to leave the comments. Let me know what's your idea about this video. What do you want me to cover more on the videos? Thank you so much for watching. See you tomorrow. Bye bye.